All right, all right. Hopefully got the technical issues sorted out. What's going on, guys? Thanks for joining me this Friday. You may be wondering why I've got the Gummy Bears up there, and that was a joke in our Discord that we were talking about how the SPY kept on hitting this support, which was the support. It was basically the retracement level from the low back in August up to the last all-time high. It was holding the Ichimoku cloud right here. And normally what I'd like to see in a trend is for price to hold that level, hold the Ichimoku cloud to go up. Because if you look, the cloud is a very good container of the overall trend. And what's going on now, at least on the 2-hour, which I like to use as a swing trading time frame, you have price starting to get out of the cloud at the same time that you have momentum getting out as well. And so, yeah, it is setting up to go bearish. In past instances where we had a breach of the cloud, it would have been right here. This was back in August. Price got out of the cloud, but the momentum, which is Chikao, if I'm pronouncing it correctly, was right about here, so it had not gotten out at the same time. Same thing happened back in July. We poked our head out, price did, but did not get momentum out. And so that is what is going on right now. And where's the next level? Well, I would like to see a pullback all the way to the daily cloud. And that would be a nice, healthy pullback. Statistically speaking, we should get some 3 on average, 5% or more pullbacks in the market in any given year. And we haven't really seen that quite yet. Even these back here, this one back in February there was a 5% there. So we've had one, but we're overdue for a good correction back into the cloud right here. And on Discord today, what I was talking about, posting a screenshot, is what I really like to look for when I'm using Ichimoku. I use it for a lot of different things, not just the cloud, but the lines themselves you can use to determine the trend even in the shorter time frame. And by the way, if you're joining either on TradingView or on YouTube, the committed folks, ask questions, feel free. Help me fill up today's live stream, because I just smoked a delicious beef brisket. It is cooling right now in the kitchen, and if I run out of things to talk about, I'm going to go eat it. So also want to plug real quickly the Discord. Look for the link in my signature or there. I don't charge any money for the Discord. I just have it available for folks to come and talk about trading. I share my trades there. We have a lot of good people. I was going to say professional, but we have financial professionals, people that are just smart money, that trades actively and talks about their trading. There's not that many rocking emojis, and we definitely don't allow pumps. So it's just talking about trading. That's why I like to keep it. All right, so back to the content. So if we go back to let's just go back to the top right here. So if you've been watching my live streams, you've been following on Discord, there was a great setup on the, what was it? It would have been on the S&P futures that was right there at the top. It was this jobs report that we had about 2 Fridays ago, 2 whole Fridays ago. I can't do, okay, there it is. So I can't do think back on there. And if things are going a little slow and you don't see my camera, it's because I changed my hardware around a little bit. I'm going to be trying to use a streaming software, so bear with me as I get all that figured out. So we had a spike here right about 454 SPY would have been what it would have been. It happened before the open at the jobs report about 8:30. But that is about where this trend topped out. The last all-time high was that jobs report. And see, from there, it started trending downward. It's been a very rough trend because it's been swinging up. People have been buying it up. It's interesting to look at each one of these open bars for the last week has been a big bullish open that just got sold off. And I think that's what a lot of people thought we were going to end up having today, but no, we just kept on going down. Believe it or not, this doesn't bother me that much because the really bad pullbacks, the really bad bearish moves, they tend to happen quite suddenly. This is a very slow descent with lots of swing ups. And so it's been kind of interesting to watch as it goes down. But I still think probably what we're going to end up doing is getting down to the cloud right here. So that's going to put us somewhere possibly in the 438, possibly just somewhere in the 430s, I would say, is where we'll try to find a bottom. If we don't, well, we'll discuss that when it comes. But what I was going to show about Ichimoku here was the progress of the Ichimoku lines. So little brief tutorial here. What you have is several lines that make up Ichimoku, and they're all based on 50% retracement levels. That's why I use that pretty exclusively in my trading. It's a Fibonacci, of course, Fibonacci 50, but I don't use the other Fibonaccis. So what ends up happening is this yellow line is the Senkou B, SKB, that we use. And it is going to be a 52 period halfway point, median. And so what's going to end up happening is the high and the low of 52 bars. So if we go back here and we measure 52, 52 takes us back to about here. Okay, so this bar right here, and so we've basically thrown out that low. So from here to the high is going to give us our 52%. And it's probably actually throwing out that one. That's what TradingView is doing. So boom, there we go. So that's why we have this where it is right now. And so the green line that I have, that is the, and I'm mispronouncing this, I know, Kijinsen, which is the 26 period, and the Tenkan-sen, which is the 9 period. I use the classic Ichimoku numbers. I know that people in crypto, they like to use some new, improved, better lines. Not all about that. It's the way I learned. That's what I'll stick with. But if something is trending in any particular direction, this is the main point here. If something is trending bullish, in this case, all of the lines are going to be pointed up. Very simple. In order for you to start going bearish from here, you first have to have the slowest cross, just like a moving average cross or something that affects. So if you go forward and you look, they start to kind of level out here, and then you get the red line starting to turn down. Now, what does the red line need to do to go bearish? Well, it needs to get below the green. So when you see something like this, it doesn't necessarily mean bearish, but what it does mean is that it's getting closer, because ultimately these things need to flip to go down. And so as the red and the green lines start to come together, that's giving you a little bit of a sign that the momentum is starting to fade. And notice here how the red line even maintained the top side as we went through the last week. It kind of got caught in this range between the support, which was based on the all-time high and this August low, and then the resistance, which was the 50% of the high versus the low that it made about a few days ago. And then as we go forward, now we broke that support. And so what you can see visually and you can think about is that price started pushing, and the line pushed these down to squeeze. Now it hasn't flipped yet, but it very likely will as the highs get thrown out. So that's one thing you can look at in the short term with Ichimoku and use those two lines. But if you see on most of my charts, I've kind of removed a lot of those things. And so that is the way that I will look at it in the short term. So that's the SPY right now. So let's see here. Let's look at Bitcoin. Let's just do a quick update on everything. So Bitcoin, I made a post earlier this week. What Bitcoin is doing is coming up to, we don't need Ichimoku quite for this. Yeah, the speed of the thing here is frustrating a little bit. So let's see. So from this last high that we made in the 5280, 800 down to the low of this recent crash, this is basically the zone that Bitcoin is hanging out and holding. This is the resistance. And so what I've been looking for is a potential breakout, either up or down on this side right here. Did a little fake out, looks like here today. I bet a few people tried to play that breakout short and it's not really going their way. Doesn't mean bullish or bearish, but you just don't have a very solid breakout one way or the other. But this is the zone that it's holding. It's trying to hold the halfway point of this recent crash. What's Ethereum doing? Ethereum, what did it do around its level? From the high to the low, I think it got actually above it, yeah. So it got a little above it, but now it's fallen off. So that is what the crypto markets are doing right now. Let's see, what else? There are a few trades this week that happened. I think it was on Wednesday. We'll take a look at this one. So Visa set up a spike. Now I didn't take the Visa. The one trade I took was Costco, but there were three potentials right here that happened at a support. This one held for just a little bit, but yeah, no, it would have stopped out. And let's see what else. Coca-Cola. What did Coca-Cola do? Yeah, this was an example of how, even though we had a good level here, when we had this spike, and it's pretty clear to see all of the levels support. This is why you can't back hold. Another example that I talked about last week about why back holding is just a horrible idea. Don't do it. Do not do it, because at this point you're just taking more losses based upon your risk. It's really throwing off your risk reward. The one thing that is holding, and this is a stock that I like and I've held for a while, is Costco. And Costco, it set up this level. One of the reasons I liked it, of course, was because it was at a 50%. And so far, it's still holding this level. So we'll see how it turns out going into next week. Like the company, spend a lot of money there. Good to own. Atom. Okay, let's look at Atom. Atom for Jen. I bet it's going up, isn't it? We'll look at the Coinbase version. All right. Yeah, that's a nice pump. What are you looking forward to do, Jen? Well, I'll let you respond to that. So I'm actually getting kind of hungry and the slowness is bugging me. So I'm just going to finish this up with my last pick of this week. This is HLIT, and what this company is, they make hardware for broadband companies like Comcast. And if you notice this week, the reason I'm back to looking at this, CMCSA, Comcast took a big hit this week. Kind of erased a lot of the gains. It's still from back here in April, still holding this level where I added. So I'm okay with that. But I've actually had a strategy, a thesis going back to June of last year. Now, if you remember June of last year, you know, we'd already had, what is it, XLK? The technology sector by June of last year. Let's take off the spike alerts. Yeah, June, we were already at the all-time high from 2020, the COVID crash. So if you ever think that something can't go higher, but what I wanted to do was I wanted to look at some alternative things to invest in related to what we were seeing. So one of the things I thought about was, okay, a lot of people are using, you know, technology. Zoom was big, Microsoft was big, Netflix, everything like that. What is the underpinning of that? That is, of course, broadband. And so I looked at a couple of companies that would benefit from an expansion, a rollout of broadband. And there's a few that came into and got put into a portfolio. So Comcast was, of course, one. So all these starting back in June of last year. Yeah, back in June of last year. And then there was also Cisco, which has been kind of lackluster. But after taking quite a hit there, yeah, I got in June, and then that did not make me happy, but now it's back up. And then there's two smaller companies that were supposed to be, you know, they're a little higher risk but higher reward. So Com is another hardware company, and back in June was when got into this one, had a very, very, very good run. Up from June, came up about almost doubled, but now it's come back to a level. So I'm watching this for it to come back to, well, it's getting around about there to where I want to add to that position. And what I saw this week was HLIT. Again, it's something that has also, since June of last year, it's still up 60%. It was up 100%. And so from this recent earnings run up, earnings being right here, we have that pullback to this level right here on the 15th. And so I like this for an addition to this broadband rollout thesis of mine. So that is what I wanted to share for this week. Question to Tammy. When do you sell a credit spread versus buying or shorting the stock? It's a good question. I think it really just comes down to what kind of account you're in and what kind of risk profile. Obviously, if you're talking about wanting to go bearish on a stock, then you would want to take on a bearish call spread. And so what you would do is you would sell a call credit spread. And so that would put you in line to be bearish. Like we talked about in, I think, 2 live streams ago, doing the put credit spread, which is a naturally bullish position. When you would want to do that is, of course, when you have a technical setup, but also you're just not going to get that much out of it. One of the things that if you're betting on like the stock that I actually am short this week is Wells Fargo. We'll just use that as an example. And so the reason is because we had this little maneuver right here. Let me bring back my retracement level so that you guys can see what I saw. Okay, so this is, of course, the 50% retracement from the swing high here at the end of August down to this low in right at the beginning of September. And so you have this price spiking out right here, and this is sitting at about break even. Now, I'm short the shares. I'm comfortable being short shares in a stock that is traded in the S&P 500 because it's very liquid. Yes, I could get some kind of a gap that could be very dangerous. But that's just the risk that you take. If you wanted to, you could do a couple of ways, and I really wish that I had the equipment to do it right now, because I would show you how to do it in Thinkorswim or no other platform, but I can't right now. So maybe we'll talk about this in another video or on the Discord. But there's a couple of ways you could do this. You could do either a let's see it, we'll call it a bearish call credit spread. I'll draw it up here. So a bearish call credit spread would basically be something like this, where you would say, okay, I'm going to sell, let's say, the 47.5 call, and depending on how you want to do it, timing is of course something that I think is, well, it is important in options. If you want to think about how to do the timing, just kind of look visually at the chart. How long should this take to play out? I would say if you see there's a big move from the middle of August down to September, that's about 2-3 weeks. So what you probably want to do is go about 3 weeks out on it to get the max, to get the most optimal. You could of course buy yourself some more time, but that's going to hurt some of your potential gains. But about 3 weeks out, and then you'd say the 47.5, that may be what it is. Let's just say they only have solid numbers. So 48, so sell the 48. Let's mark that off. Text. And then to make it into a credit spread, you would then buy. Okay. And so that would be your credit spread. And then of course, if it stays below this level, you would make the full value of your credit spread. You get to keep the premium that you receive. But if it comes up above 49, you would take a max loss. Not a big fan of doing call credit spreads because you never know what's going to happen. There's a big difference in doing the puts credit spreads in a bull market. With an individual stock, it's going to go back and forth. And so if you have a, here's the general point I want to convey to you. If you're right, I want you to be very right. And what I mean by that is if you are using technical analysis to create a directional bias in some kind of instrument, I don't see why you should only make a buck when you're risking 3. Because if you're right, you're only going to make $1. But if you're wrong, you're going to lose 3. And so that's kind of what ends up being the drawback to doing a call credit spread or any kind of credit spread. You're taking on more risk. Yes, you got a really high probability of winning because if it goes in your favor, you win. But you just don't make that much. Me personally, I would rather take a short position with a nice at least 3-to-1 risk reward ratio. See, in this case, I'm willing to take it here at the level and try to play a retest to the bottom and get, instead of an inverse 3-to-1, instead of risking $3 to make 1 or $4 to make 1, as sometimes might be the case, I want to risk 1 to make more than 3. That's what I want to see happen. Now, you can make that happen with a debit spread. Now, the debit spread is, of course, the opposite of a credit spread. And what you would do in that case is you would, let's put it this way, you would buy, let's say, what you have to do is you have to go out of the money, just like you'd be doing out of the money for the credit spread. But you would buy an option close to in the money, and then you would sell an option further out of the money. Now what this does is the inverse of the credit spread. You're paying for this, a debit. That's why it's called debit spread. You need this to go in the money all the way past 43 to make your full profit. You may also want to go up to 45 with your sold leg at 43. And the risk reward is, of course, going to be inverted. In other words, you'll be risking what you paid for the debit spread to make that full value. And so if you go out of the money on that debit spread, you can cap your risk at just what you paid for the credit spread. And it's going to be cheaper than a naked option, a single option. But there's a couple of advantages. Number one, it's going to be lower risk. You're going to pay less for it. And that's why a lot of people like to do that. But you give up the unlimited reward of just a single option. Another advantage, because you have a sold leg, you're going to offset a lot of that theta decay. You could take a 44, 43 debit spread. Instead of 3 weeks, you could take it out for a month or 2 months or whatever you want to do. And that thing can just stay on there. And then if price finally gets down past your strikes, well, then you make the money. No, Jen, that direction would be positive because you're buying it closer to in the money and you're selling this one right here. So the reason is because once it comes in this zone right here, that's where you start making your profit once it gets past your buy leg. So it's the exact inverse. So it's a good question. I think what would be good idea is for me to, I'll make a note of that. We'll look at some of the differences in a real live trade. Maybe by next week, by next Friday, this will have played out. May also look at Costco or UNH and look at some of the different ways to do that. I'm gonna make a note of that. Different ways to play. Because I want people to have all these tools in their arsenal, because what you're going to use to express a trade, it may be situational and it also may be based on your personal preference. So, any other questions? How was the audio on YouTube this time? All right. Thanks for showing up, my dedicated folks. We'll see you next week, and I'll have my hardware stuff absolutely figured out.